Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for the week ending Friday, July 26, 2019. So as we head into the weekend, some things to look for next week. Not really a lot of anything new or important to report. The current uptrend continues without any sell signals or signs of a reversal of the trend yet. However, there are some things I want to point out that I haven't pointed out recently. First of all, it's today. Let's look at the volume. This is the SPY, the S&P 500 tracking ETF, and you can see the volume bars down on the bottom. You should be able to make those out. If not, you need probably a higher resolution monitor. But they're the gray bars here. I have them turned down a little bit. I don't like busy charts that have too much bright colors that take away. But right here, I'm going to put a crosshair. You know what? I'll put a horizontal line on where today's volume bar was, and when you go across now, you look, there it is, right here. It went away. There it is. You can see that we are at or below the lowest volume of the year so far. Very most I see one day back here, but either way, splitting hairs, whether it's the lowest day or a little bit lower, some of the lowest volume. Now, what does that mean? Well, it's always a sign of non-confirmation of rally. Not always, but usually. And now let's look at a chart. Here's something I've shared in the past. This is for years I've used this. I'll use sometimes I'll play around with the number, but I'll put a 10 day or 10 period or 10 day exponential moving average on volume, and that's what you see down here. So more so than the volume bars themselves, because one day doesn't mean, oh gosh, we had a low volume day, the market's and it went up. That means it's non-confirmation the market's going to drop. No, what I look is for persistently low and extreme low volumes, and that's where the 10-day EMA helps smooth it out. So you look at this line here, and so when we go back, here's all the way back to the beginning of January 2018, and you can see that it's not a perfect indicator, but when the volume approaches, I put a red line. Doesn't matter where that level, it's just kind of arbitrary because at different points in time in the market, volume levels, the norms and the highs and the lows are different. So this is just showing for the past couple years here what we're looking at, and you can see that when you see this declining volume down here and you get close to or at that red line, very often that's where you get the big drops. It means the market's rising on declining and very low volume. It's a sign of non-confirmation. Buyers are drying up. That's all it's simply saying. And you can see here again, we hit it a couple times right there. We had a pullback the first time, a bigger pullback the second time. Then we started rising. Remember, this also came on the heels of a pretty big correction. So it's when you get to that top. So again, it is not, and I'll be very clear, when you look at this, not a buy and sell or sell signal every time you hit that red line, but it is a, hey, something's not right. This rally is just lifting up on drying up volume. There's really no conviction, and then boom, that was as you can see, volume picks up on the sell-offs, and there was a big drop we had in the fourth quarter. We didn't hit that red line again. Remember, the last time we hit it back here in 2018 was before that 20-something% drop in the markets, worst correction that we've had since the bull market started. And then we hit it most recently again right here, and that was the biggest drop so far, biggest correction in 2019. So we touched it, kissed it recently, and now we're well below that line. So this is, to me, it's just another of many red flags. And look, you can wave these red flags all day long. They usually do play out. It's just they're not timing indicators. They're just a, hey, something's wrong. Market's at new time highs, but nobody's buying it. There's not a lot of conviction behind. Shorts have given up, but the buyers just aren't showing up either. And so that's what I wanted to show you there. QQQ, have a few more whipsaw signals on that, my volume indicator here. Again, you can replicate this and put up different EMAs, kind of find where that line hits, but you can see for the most part it does a pretty good job. And again, at least warning, heads up, super low volume, boom, drop. Low volume again, boom, we got a correction. We had, kept hitting that, kept correcting every time we hit that line. There was another correction. This one marked the top. So we had these persistent, a steady advance on persistently low volume that finally led to the 20-something% drop into the December lows. We did touch a line here, didn't, got a little correction, not much. But there it was. We went below it right here. You can see for the first time, actually crossed below it. Actually, that was the first time ever, and boom, then we had the biggest correction in 2019, and now we are clearly below that line. So that just tells me, hey, it's not really a healthy rally. It's not what you want to see. Not many people wanting to buy these new highs, but it seems whatever the reason is, just take it for what it's worth. I just thought I'd share that with you. Well, same old, same old. These market updates are getting old, but I told you I'd do one today. Markets were up, QQQ, a little stronger. And let's talk about earnings real quick. Well, we'll get to that. So there it is. Same. Nothing has changed technically. We're still above the breakout point. The most recent breakout above these highs are around 190, 150. Back tested it once. We're moving higher again on very low volume with clear negative divergences still very much intact at this point in time on both QQQ and SPY. SPY, here's a little uptrend line I've added here. You can watch for a potential sell signal, especially if it breaks on volume. And then the target's obviously still that 294 level. That was our big breakout point in SPY where we had a, double top highs right there, and then finally took it out here. And again, this move has just been on declining and diminishing volume. So while that's not a sell signal, it's a be careful, because that's often when the big drops come, when you hit those low, have advances on low drops. So we get a sell signal soon. I'll do an update. Otherwise, if nothing big happens on Monday, I'll probably go back to doing, maybe buy or try weekly updates, 2-3 updates a week on the broad market. Still focused on individual trading ops. Members, I just put out a long video covering probably 24 different trade ideas, individual stocks, sectors, both long and shorts. That was just published on the site. You should have that now. So there's a little not reading material. I did that in video format, so you can watch that over the weekend. All right, let's look at some of those earnings that we had last night. All right, so where do we want to start? Down here on the bottom. All right, so as I said last night, you don't want to jump the gun on a position when they have a big move in after-hours trading, especially not the initial reaction, because as I said, earnings consist really of three parts. I view it as the initial earnings report, whether what the company reported as earnings or losses and all their financial data for the quarter. Then it's followed usually by the conference call, and then that can change things drastically. That's where the company will then, forget about, okay, here's what we earned, but let's dig down into those numbers, and let's, some companies, not all, but most will give you forward guidance, what they expect going forward. So I think for, Intel traders, it was a lesson learned. Now, I'll just go through from the top to bottom. Here's Starbucks. There's their earnings yesterday. Boom, they popped up. There's their overnight highs. Traded flat from there, and then by the way, guys, the dark gray right here is the regular session, so that was the day before yesterday. Overnight session, the dotted line is the overnight daybreak, or when we roll in. So this is pre-market here, post-market yesterday, and then today's trading. So Starbucks built on their gains. Alphabet popped up and pretty much closed right about at last night's highs, but it still held those gains. So that's about almost a 10% gain on Alphabet. Intel was the one that played that game. We had over a 10% reversal. There's the after hours pop. Huge gain, over 10%. 110 or 100% plus of that gain faded. So this is why, again, you don't want to react to the initial reaction. If that was in the regular session, you would have seen Intel enter that huge gap I talked about. I think it was from April. Big earnings induced gap, a massive gap. I covered Intel recently on the site as a covering the semiconductor sector and the components there, and I showed that Intel had rallied into major resistance and was at the bottom of that big gap resistance, a huge gap. And that so what happened is, when you look at the chart, I'll go over to that chart in a second today. We opened there, popped into the gap, and then failed it. So that is a false breakout. Bottom of especially a big gap, is a significant resistance level. Intel couldn't hold it, and then boom, they faded it. And you can see a lot of the fade came after the market opened today. Again, this is just an example why I said let the dust settle. Why take a position just before earnings or right after, jumping on the initial pop or drop, because just as often I'll see these big drops get reversed. So that's it. Amazon, which again is the largest component out of all those that reported last night in QQQ, they sold off pretty big, recovered some of that, but they still closed down today. Amazon closed down 1.56%. I think you can see it there. And that's that. So overall, there was enough, these and some other stocks lifted the indexes. We had a pretty decent fade after hours in QQQ right there, right before and right after the market closed. It doesn't show very well here, but the Qs closed up, and then the NASDAQ futures only closed down. Here, I'll show you here. I can zoom over to another chart on this monitor here. We'll go right here, and you can see this is the big after hours drop in NQ. So we'll see. To be continued next week. And again, not anything, market was up today just like it was down a few days ago, and neither of those had any technical significance to me. And so here's Intel. If I had to bet on any of those companies going into earnings yesterday, that would be down instead of up, it would have been Intel. Google had a somewhat constructive chart. It was in an uptrend, well above trend line, whereas Intel was overbought. And this is what I covered in the recent video for members. We were overbought right there, and overbought, and that was right here before this big drop, and overbought. So this is the most overbought we have been since that point in time. And again, it's all probabilities and statistics. Overbought, I always say this, overbought can and often does become more overbought, like it did here. You got overbought at this point, you kept getting overbought, but eventually all it's saying is, look, it's not objective. The risk reward is no longer favorable, especially, this is a stock that already topped, like a lot of others out there. Had a big double top here, big impulsive reversal right there, and then again reached not just overbought, but an extreme overbought reading while it ran into resistance at the same time. So the fact that it hit resistance itself isn't bearish, because what happens, and what may happen here, maybe consolidates now, and then comes out here and it builds up the energy and works off these overbought conditions. I like stocks that are pushing up against resistance once they've consolidated and they're not so overbought, or they don't have negative divergence or anything like that. Then that I'm looking for a breakout for long side. This one could still do that, but I just wanted to say, you can see right there the big red candle, the pop into the gap. There's that huge gap I'm talking about, and there's a rejection. So again, if nothing else, look, I didn't have a position. I'm not a gambler, I take calculated risks. So I figured the Intel of all of them would probably end up to the downside, but again, it's not an actionable trade. From here it could be. I mentioned that on the site today. We'll have to watch. The semis have a lot of momentum to the upside. No sell signals on the sector yet, but this is the industry leader, and that's why I'm talking about this one, the largest semiconductor stock in the world. And you can see that, I look at it this way. Wait to see how it opens on Monday, because markets are closed now anyways, but there's a failure at resistance. So you could have shorted today at 53, or waited to the failure once we popped into the gap, and maybe on Monday they give you another chance. And look, like any trade, it works out or not, but you take calculated risk. So if you short with a stop a little bit above, not at 53.08 or 53.09, but somewhat above whatever your number is, depending on what you're targeting for a pullback trade, and quite possibly more. I've shared my analysis on Intel several times, going all the way back here to 2017. I was following this bearish rising wedge, saying no sell signals, but when you break this wedge, Intel is gonna drop 24 to eventually 32%. I said that just before it dropped, posted this chart. It dropped, it went up 2% from there, then broke down, gave me that sell signal, hit my first target to the penny right here, and that was a 26% drop. Bounced up, put another divergent high, and said next sell signal here on this break of this trend line. Boom, there it is. Hit that same 42.59 target support again. It keeps tapping on it. So my guess, if we come down to it again, the next time we get there, at best we have a minor reaction and then go through it. And at worst, we just go on right on through it, and then ultimately hit my final downside target here for Intel of 38.27, which from today's highs would be about a 28% drop or so. And this is what tells me that's going to happen still. It told me back here, these divergences, the divergent high, the clean trend line, the breakdown, and now we have this uptrend line here that I'll track. Now look, we can keep walking up and up and up and up that trend line. Maybe we go on and burn through the divergences, but the break, a solid weekly close, just like we had right back here. There's your red weekly candle, clear as day, can't miss it, unmistakable sell signal, and boom, there as well, right through there, close the week down with a big red bearish engulfing candle. And so that's what I'll be looking for here, whether it happens next week, next month, or 3 months from now, or never. If it happens never, I don't take a position. I'm not short. So that's one to watch. And if Intel rolls over, the semis are probably going down, and the semis are the canary in the coal mine for the tech sector. And tech, of course, is the largest sector in the entire stock market, both in the S&P 500 as well as the NASDAQ 100. So there it is. There's a stock in an uptrend. Make no mistakes about it. I'm talking a bearish talk on it, but there's not any sell signals now. Like I said, there is an objective but somewhat aggressive entry on a short below that gap with a stop not too far in it. Nothing ventured, nothing gained. You get stopped out for 2-3% loss. You move on to the next one, or maybe it goes on to break down and play out that way. So that's what I'll be watching, and it kind of all plays into the market. I know you might be wondering where I'm going with talking about Intel, but again, Intel breaks, semis break, tech breaks, market breaks. That's simple. And then on that note, to wrap it up, well, when does tech break next? Right here. There's the uptrend line that I have. There's our divergent high, big divergence. Break of that would trigger the next sell signal in tech, which in turn would trigger the next sell signal in the market. Just like we had a clean breakdown there. I was saying the same thing for a long time. No sell signals yet, but it's coming. When tech breaks, the market breaks. Divergent high. We had divergent high here. Kept diverging, and then boom, it broke. And that was a, I don't know, maybe 30% drop in XLK there. Just like you had a divergent high here and a drop, divergent high here and a drop, and there and right here. So just waiting patiently, guys. But until then, better fish to fry elsewhere than the broad market. But again, keep an eye on it, because you never know when you get those sell signals. They can come out of the blue when least expected. So as of now, trend is up. If you're long, congratulations to you and good luck to you going forward. The trend is currently, bullish right now, but we'll watch for a sell signal. What again would that look like? Not a limp down through there, a big red impulsive candle. The redder the better, I like to say. I know that's a little bit of slang, but that's what I like to use. The redder the better. That's not red at all, but that's close to being red, something like that. But bearish engulfing, if you got that wipes out, a couple weeks of trading, all the better. So until we get it, let's just sit tight, and I'll continue these updates and as frequently as needed. And that's about it. All right, guys, have a great weekend. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.